Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Orchid Island Capital Inc. quarterly report. Orchid Island Capital Inc. provides the following businesses and services. The company invests in residential mortgage-backed securities, RMBS, in the United States, specifically agency RMBS backed by single-family residential mortgage loans. Its portfolio includes traditional pass-through agency RMBS, such as mortgage pass-through certificates and collateralized mortgage obligations, as well as structured agency RMBS like interest-only securities, inverse interest-only securities, and principal-only securities. The company also offers REIT, Real Estate Investment Trust, services, allowing it to avoid corporate income tax on a portion of its net income if it distributes at least 90% of its taxable income to shareholders. The significant increase in Orchid Island Capital, Inc.'s ORC stock price over the past year can be attributed to several key news events and earnings reports. Notably, the company's quarterly earnings reports have been major contributors to its stock price fluctuations. In 2025, Orchid Island Capital reported 4 consecutive quarters of improved financial performance, with notable revenue beats and significant increases in net income. The Q4 2024 earnings report saw a 5.56% increase in stock price following the announcement of surpassing expectations, with EPS of $0.07 and revenue of $8.1 million. The subsequent quarters also showed substantial improvements, with Cone 2025 reporting a doubling of net income to $0.18 per share, Qwo 2025 experiencing an unexpected loss but significant revenue surge, and Q3 2025 showing a robust rebound in financial performance with net income of $0.53 per share. These positive earnings surprises and strong financial performances have collectively contributed to periods of increased investor confidence and subsequent rises in Orchid Island Capital's stock price throughout the past year. The primary drivers of revenue growth or decline in a company's financial performance can be attributed to several key factors. On the revenue growth side, the issuance of shares under equity distribution agreements and gross proceeds from sales of shares contribute significantly to increased revenue. Additionally, net interest margin on leveraged PT RMBS portfolio, interest income from unleveraged structured agency RMBS portfolio, capital appreciation in PT RMBS and structured agency RMBS portfolios, higher prepayment rates for POS, zero-coupon bonds, and slower prepayment activity due to higher long-term interest rates all contribute to revenue growth. On the other hand, investment losses on mortgage-backed securities and derivatives, decreased prepayment levels for agency RMBS carried at a discount to par, higher short-term interest rates increasing borrowing costs and affecting net interest margin, and sales of U.S. Treasury securities primarily to satisfy collateral requirements of derivative counterparties are the primary drivers of revenue decline. These factors highlight the importance of managing investments and interest rates in maintaining a stable revenue stream. Net income experienced a significant fluctuation between 2024 and 2025. Initially, it increased by $55.6 million for the 9 months ended September 30, 2025, compared to $32.1 million in 2024. However, this trend reversed in the 3-month period, with net income decreasing by $9.3 million due to losses from RMBS sales. Profit margins also underwent a change, decreasing to $0.53 per share for the 3 months ended September 30, 2025, compared to $0.24 per share in 2024. This decline may be attributed to the decrease in value of agency RMBS carried at a premium due to increased prepayment levels and potential inadequacy of hedges. The reasons behind these changes are multifaceted. The increase in management fees and allocated overhead costs resulting from a new agreement with manager contributed to the fluctuations. Additionally, sales of RMBS in 2025 resulted in losses, whereas sales in 2024 generated gains. Furthermore, accelerated yields on POS, zero-coupon bonds, from higher prepayment rates and positive price movements on interest-only securities also impacted profit margins. The company's financial performance indicates a significant achievement in its ability to generate cash from its core operations. A key indicator of this success is the generation of positive operating cash flow, which suggests that the company is capable of producing sufficient funds to cover its operational expenses and invest in growth initiatives. This milestone demonstrates the company's financial stability and resilience, positioning it for continued success in the future. Management is optimistic about the company's outlook, citing favorable market conditions that will allow for above-average returns on new capital deployment. To capitalize on these opportunities, the company plans to invest in traditional pass-through agency (RMBS) and structured agency (RMBS), generating income from net interest margins. To mitigate risks, management will actively manage capital allocation, use derivative instruments to hedge interest rate risk, and maintain sufficient liquidity and capital resources. In a volatile interest rate environment, the company will allocate more capital to shorter duration structured agency (RMBS) and utilize hedging instruments such as interest rate swaps and swaptions. Overall, management's strategy focuses on generating stable income streams while adapting to changing market conditions, positioning the company for growth and above-average returns. Orchid's dividend policy and share buyback activities. Orchid has elected to be taxed as a REIT, which requires it to distribute at least 90% of its taxable income in the form of dividends. The company pays regular monthly distributions and has consistently paid annual dividends since its IPO, meeting the minimum requirement for continued qualification as a REIT. In contrast, there is limited information on share buybacks. While Orchid has a stock repurchase program with multiple authorizations and purchases made, no specific details are provided on the total number of shares repurchased or the aggregate cost until September 30, 2025. Concerns over inventory buildup and supply chain disruption loom large. The current economic landscape is marred by concerns of inventory buildup and potential supply chain disruptions. The introduction of tariffs has added upward pressure on prices, casting a shadow over the economic outlook. Furthermore, there is a possibility that tariff-induced price increases may persist in the future, if not fully absorbed by other parties along the supply chain. This precarious situation highlights the need for careful management to mitigate these risks and ensure a stable economic environment. That concludes the financial summary for Orchid Island Capital Inc. Feel free to comment below, and I will be happy to answer them when possible.